Before we get into the discussion of sort of, well, now what are we going to do because the exit lenders pulled the rug out from under us when we were at the confirmation hearing, we want to sort of discuss the context of how do you get to that situation when you're representing a company in distress. What are you doing in your various roles to try to get to a closing before that confirmation? And I guess I'd start, John, with you. I mean, you decided to do a loan-to-own strategy here, where you were going to invest in what you thought the Fulcrum security in and co-agent an exit. What was your thinking on that?
Well, a couple of things. First of all, we would spend, we're private equity investors, so we don't have a trading strategy. It's a private equity style. So we do something like 60 to 90 days of pretty deep due diligence, like a private equity investor would, unlike a hedge fund. So we're looking very carefully at management, all the things that you would do normally with due diligence. The driver for us, it's value, 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 right? We're, at the risk of offending anybody here, the name of our firm is Fulcrum Capital. It's not shit out of luck capital, right? So we want to make sure that our view of value and our view of the trend of the business and the trend of the industry generally doesn't put us, out of luck.
Okay, and Jeff, you were already in this deal. You had a blocking position in the revolver. What made you decide to go ahead and be a co-agent and provide an exit facility?
Well, as you said, we were already in the deal, certainly had a blocking position, and it's a means to an exit. It's defensive in its nature, and we thought we could really go out and sell the deal from where it currently stood, and frankly, we relied on management's plans and the same due diligence that John had looked at, and thought we had some EBITDA numbers that we could rely upon.
Speaking about reliance on numbers, Mike, who put together those numbers and who went out and got this exit financing?
Sure. For a deal this size is complicated, a capital structure with multiple tranches, we determined that early on that it would be necessary to do very detailed projections after first assessing really what the go-forward business is, which lines of business to stay in, which to exit. We built bottom-up projections from the field. We vetted those against the assumptions that we had with respect to the market in general, view of leading economists. We reviewed the projections extensively with 3 or 4 sets of financial advisors from the banks, the creditors committee, prospective investors, all geared towards arriving at a set of projections that ultimately, that by the time they went into the disclosure statement, that everybody was in general agreement on.
Okay, and Matt, your job was to go out and find this financing so you could earn your success fee. How did that come about?
Well, working with Mike's team, the first thing we did was we dealt with the existing lenders. And the approach that we took is let's make sure we have a fallback. Let's make sure we have a plan, on an internal basis with our existing capital providers, if nothing else. So we always have something to fall back on. And then with that, also working with some of the more opportunistic investors within the capital structure, such as Fulcrum. And then given the market for exit financing, which is a pretty shallow market right now, there's only a few guys that can actually take the lead on underwriting a facility of this size and ultimately being able to place it. So we went to a relatively short list of potential other lenders, and depending on how much time we have, in this case we had a little more time pre-petition. It accelerated kind of post-petition when we start seeing things move around a little bit. But we put together full-on presentations, marketing materials with all of the business plan and the projections. And then really it's a matter of staying on top of the performance and relating the information as timely as possible to the lenders, to the prospective lenders, so they understand exactly where the business is as we move toward the commitment.